Unmuted. Heidi ho, everyone, and welcome aboard. Good to have you here for the last. Good Lord, I look like a peacock. Well, not really. Nice to have you here for the last trading day of the week. For me, anyway. Normally, for me, sometimes I manage to get in front of the charts on a Friday. Maybe that will be the case tomorrow after I go to the dentist. Last trip to the dentist. This is my third occasion this time. Never fun, is it? Really never fun. Welcome aboard, guys. Good to have you here. And I'm trying to find us on YouTube at the moment, but it doesn't seem to want to show me. The reason for that is I want to see who can't get into the room. And if you can't get into the room, guys, what you need to do is join our Telegram group, where you will find a link, or I think it's on the ATW Telegram group. If you're in that, there's a link down below anyway. Just go there and you'll find us in some shape or form. You need, if you want to come into the meeting room, to address yourself with two names. And the reason for that is we have had some, what do you call them, trolls come into the room in the last week or so. And we're trying to eliminate that, of course. Not very savoury items are posted by those people, and you get screamers on and dreadful stuff. Won't go into that. Hey, new president. Got a new president. Do we really care? I think we should. That dude that's just gone out was just outrageous, wasn't he? But man, did he shake things up? Hell yes. Tragically, obviously in the last week or so, or previously, there were bad repercussions around his denial, I suppose, that he had been beaten. I was going to say fairly and squarely. Don't think there's such a thing, frankly, in American politics, but he was beaten and he had to accept that in the end. He didn't do it graciously, and he still hasn't done it, and he'll, I'm sure, go on for the rest of his days saying we won that election. Anyway, that's neither here nor there. We do have now a new president sitting in the White House, and he's been busy signing executive orders, as they do when they come in. They just make a little bit of a mark. The wall, they've stopped building the wall. Surprise, surprise. And a few other things. The Paris, what's it called? Paris Agreement, through climate change and carbon emissions. That's been rejoined by America. But I better not go into that right now. I have no idea what that means, frankly, to the markets and how the market will read that. I think the stock market will probably benefit on the back of all that. But what the currencies are going to do, well, let's see if we can find a common theme around the new prez. I'm not sure we will in the first instance. But anyway, let's see what we can do. First up, we want to go to the pound breakout trade, which was a failure yesterday. And obviously we're trying to avoid that. At the moment, these are the parameters around which we will trade. And those of you here for the first time, welcome to you. What we're trying to achieve here is the breakout of the breakout of the last three bars, hourly bars I'm talking about, 1 hour time frame. We're trying to trade the breakout of the last three bars, this one, and this one, prior to London Open. Now, there is science, there's science behind that, right? All you've got to do is get the formula right in terms of, or the management right, as how to trade it. The science around that is that it is rare that pound US dollar, and this is cyclical like everything else, it is rare over time that pound US dollar will be in the same position that it was prior to London Open, say 2 hours in, 2 days in, whatever the case may be. And we're trying to catch that move, right? And if it is a trend changer or a game changer, then that's what we want to be part of. Look, you don't have to get this right too often to make a reasonable system where your account balance increases. because, you know, if it does run, generally you're going to get, you know, 4, 5, 6, 10 to 1 out of it. And that takes care of a few losses, one of which we had yesterday. Now, I hasten to add, oh, hang on, I better place these trades. So the levels are right, guys. They're on my screen. If you want to follow this, the levels are 100% correct. I will put the sell stop in first because it's telling me to do that. If you're thinking of trading this, then you need to be aware that it is not a proven system, and we're not advocating that you actually trade this at the moment. It is very much in test mode. Now, the level I've got for the sell is 1.3679. And the stop loss for that is 1.3671. That doesn't make any sense at all. So those levels are not correct. Hang on a sec, guys. The sell is underneath that bar at 1.3679. That's correct. The stop loss should be 1.3695. Oh, and it is. I was going over here. My apologies. Let me try that again. Sell stop at 1.3679. Stop loss 1.3695. And that one's good to go. What a remarkable start to the session. They bounced out like no tomorrow. Nothing, absolutely no reaction. That's okay. Let's put the long in place. Now, I hasten to add that this is a one cancels other trade, or OCO trade, where if the long is triggered, we cancel the short and vice versa. 1.3711 is the entry for the long. Stop loss for the long is 1.3691. Didn't like that. Why? Because I had buy limit press, that's why. That should be better. My goodness. So a racing circuit outside. Okay, so now we've got the long in place above this bar with our stop loss below it, and we've got the short in place with our stop loss above it. Whichever one triggers, we will cancel the other, and vice versa, of course. What we're looking for here is half of the risk that we take. So if we get triggered long, we'll get triggered long at 1.3711. Our stop loss is 20 pips below that. We will take profit 1 at half of the risk. So in this case, 20 pips of risk, 10 pips of TP1. So that becomes 1.3721, at which time we will remove half of the position. So if you're trading this at 0.1, as I am, of one lot, you would remove 0.05 of one lot. And at the same time, move your stops the same amount of TP1 from entry. So in other words, taking 10 pips of TP1, that will be at this level. A little bit ambitious going through the high, but there you go. Put that in exactly 1.3721. That is TP1. And we take half off at that point, and then we would move our stop loss from where it is now to 10 pips from entry, making that a free trade instantly if we hit TP1. Same going in the opposite direction. Now I'll put that TP1 in for the 1.3671 for the short as well. $1.3671. Okie dokie. All right. If anybody doesn't understand that and would like to know more about it, then please feel free to enter into the chat if you're in the room, or if you're on YouTube. Well, same thing, the YouTube chat. I can't find us on YouTube at the moment for some weird reason. Let me just check one more time. No, I've got all the recordings, but not the live show. That's interesting. So, Angel, you're going to have to keep me honest on that because I cannot see any questions. Oh, there we go. Now I'm there. Now we're happy. Got it. All right. So, guys, if you want to come into the meeting room, as I said, you can. Yeah, got it. Thank you, Angel. You can come in via the links below, and I think the Telegram group is that. I think Angel, that's right. I'll get this right one day, and be actually able to go bang. This is how you get into the room. But if you use those links, you should be able to come in. But when you do come in, you need to use two names, guys, because it's quite possible that we don't know you, and if we don't know you, then how on earth are we going to let anybody into the room? We need two names. So identify yourself, basically, is what we're saying. All right, the pound trade not yet triggered, and that's not unusual. Would I like to be going long here? No, I would not. Let me just appraise this from my point of view. We're at extreme highs here. How extreme? Let me go. Well, it won't be that extreme because this has been a very, very long and protracted downtrend. In fact, if I have a look at this chart, we've gone through the most important resistance level, which was around about here at the 135 mark. We're now up around about the 137-ish, or approaching that level. And I see some more upside here. Look, if it's extremely difficult for me to say that I'm a bull the US dollar, and I'm not. I just can't say that. And the reason I can't say that is because I believe it's been extremely overvalued for an extremely long time. Hi, Lewis. And look, the market's kind of given us that indication over the past, 12 months? Is it 12 months yet? Probably is. Where it's been tumbling. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, not quite 10. 10 months we've been on a downward spiral here. And I don't see that stopping. And I'm not sure where that ends, frankly. But every now and then you kind of get the indication that it's going to bounce. Tried it again yesterday and failed. Fortunately, I'm old enough and wise enough to know that if you're going to try those things, which are really speculators, I was speculating yesterday, and I don't do that too often, frankly, but I was speculating that the Biden thing, the inauguration, in concert with a BOC statement, might have just given us a bit of movement to the upside on the dollar CAD, and I tried that. No, didn't work. My bad. And I was silly enough to put that in the Telegram group as well. My little speculator. If you are in the Telegram group, and you should be, because we carry on this show basically in that forum. If I do put small stake in there, believe me, it's small stake. It's 0.25% or less. So don't go crazy if I put one of those in there. It basically is a speculator, and it was yesterday, and it failed. So where are we now? Well, today's candle, this is the dollar index I'm looking at, by the way, is, I guess, deepening my conviction that we may well be coming down to match this shoulder. I had exactly that last week, and it didn't happen. And now we've got a bounce off this little intraday trade line, which incidentally has set up a long trade for my particular strategy, the way I trade it. It's a candle pattern that I like in a place that I like it. But it was just now tough for me to say, let's go US dollar. I think I'd much rather stay clear of it for now until it does reach a substantial level. Maybe that's it there. Or if we put in a significant lower high or something like that, I can look to trade it in the opposite direction. Now, I don't trade the dollar index because my broker won't allow me to do it. But of course, what it does allow you to do is correlate that back to something like euro dollar. And has this moved? Hang on, I better check this. Pound US dollar. See if we've been triggered or not. No, we have not. So going back to what I was just saying, if I can, and those of you who don't know, the dollar index, of course, is the US dollar versus the major currencies, the 7 major currencies or 6 major currencies. So it's an aggregation, if you like, but it is weighted heavily towards euro dollar. I think it's some 70%. I'm not sure if that's right, but that's what the experts tell me. So I'm okay to go with that. So if we go and have a look at euro dollar, it's kind of a proxy. I'm not 100% on board with that, but it is kind of a proxy for what's happening with the dollar index. So the euro is telling me, as you would not expect, in my humble opinion, that it's coming off the top. So if the dollar is going down, why is euro dollar going down? There's a question. But this is a weekly chart. And if you go to the daily chart, it kind of makes a little bit more sense, where we had that rally last week in the dollar, but now it's coming back off. Interesting on this chart that we've only come back as far as the monthly pivot and indeed the weekly pivot and can't get above that at this point in time. I am confused. I am totally confused, because if we go with the theme that the US dollar is going to continue to weaken, then how can you trade euro dollar short? But I'm also of the opinion that the euro is going to weaken. Answer: go somewhere else. Get away from the dollar. And that's exactly what I intend to do at the moment. It's just completely get away from it until something becomes completely clear. Yes, you've got that covered, Angel. All good. I don't see any questions in the chat box. So I'll go back to here to see if that's actually made a move. No, it hasn't. I should set an alarm, shouldn't I? That would make sense. Does everyone know how to set an alarm? I assume you do. Apparently I don't. I'll do that a little bit later anyway. I'll just keep coming back and having a look at it. So with that in mind, where do I go? Well, I go back to my roots, I suppose. And those are, if I go to a different chart, I'll show you what I'm looking for. Oh, I should have traded that. I'm in Aussie Kiwi long, and I saw this tweezer top here on the daily chart and thought, oh, this is going to happen. We're going to come down to the weekly pivot and maybe even burst through it. Where's my trade on Aussie Kiwi? I've got my stops well and truly under the weekly pivot. So this may be just a pullback, but it also may be a reversal, because that is a very strong signal. The issue with it is, what level is it at? I mean, the question you need to ask yourself is, what level is it at? And you can see it's a pretty strong one. That's why it's bouncing off there at the moment. If I'm to stay in this trade, and we've been in this trade for, what's the date? A month, just about a month. And we've taken a fair bit of profit. And our entry was where? Can't remember now, because I can't see it. There it is. Our entry was way down here. If we get taken out, that's fine. It's not desirable, but it's fine. But I think we've got our stop loss in the right place. If there is a bounce here, happy days, we can go on with the job. But at all times, you're expecting a retracement, and this may well be deeper than where our stop is. That's why you use a trailing stop, so that you can bank all that money. The next level, of course, is way down here. And that one's pretty okay as far as I'm concerned. If I'm not in the trade, am I thinking short right now? Yes, I am, but I'm thinking bounce off here, lower high. If we put in a higher high, then this is going up, yeah, much higher, but not right now. But it goes with the theme that I'm looking for, is get away from the US dollar, get into minor pairs or minor crosses that don't include the US dollar. So go back to quickly check the pound, nothing there. What else are we? Oh, we're in EuroCAD as well. EuroCAD put on a bit of a spurt yesterday, got us into, where are we? 53.11. We're about 80 odd pips up, but we've taken a big risk here. In term, I don't think it's a big risk, but the candle that we're trading and the amount of pips that we're risking is quite considerable. But the reward is also quite considerable, in my humble opinion. So we need to get down to 52.05 before we take profit on this, which is kind of there-ish, which is a nice confluence area. I actually love this as a take profit one area. It's the bottom of the range being the descending channel and a horizontal level. So there's absolutely nothing to do there. We spoke about that yesterday. I said we go back to my roots, right, which are back on this chart. And what I look for every single day of the week is what I call either inside bars or key reversals. The inside bar here was impossibly tradable. You couldn't trade it, in my humble opinion, but as I said, it looks like it might be a good one. What is an inside bar? Well, I'm sure you know the terminology inside bar, but for me, an inside bar is a confirmation of something. And it's a confirmation, in this case, of a key reversal bar. A key reversal bar is a bar whose high is higher than the previous bar and it closes on or near its low. Does this qualify? It's kind of dodgy, isn't it? It's not really near its low. It's certainly not on its low, but it's the kind of bar that you'd like to trade, in my opinion anyway. It's got a nice little white body and all good. The problem you would have there trading that, and certainly rule me out of it, I couldn't do it, because you've got a risk here of, let's say, 66 pips, and your first reward has to be around about six pips. When you say your first, I say my first, because there's no way I would trade through an untested weekly pivot. And I'm hoping I can show you why a little bit later, if this does bounce and goes back here again. If it just continues to crash through here, then obviously my point is moot. But why I wouldn't do it? Because I think there's potential here for this to bounce, not necessarily take out the highs, but put in a lower high. Either gets you into a position where you've either got massive drawdown or you're going to get taken out. Not ideal. You could pick that up at a better place, in my humble opinion. So that would rule that one out. The next one is Euro Yen. Now, key reversal is, as I said, a candle whose high, if you're talking about going short, whose high is higher than the previous bar and closes on or near its low. Well, that's certainly not the case with that, which is preceding the inside bar. Inside bar is there, but most definitely that is not a key reversal bar, because what you'd need for a key reversal bar here is the reverse of what I said before. You'd need its low lower than the previous bar, because this is closed on its high, right? So if we're reversing, that's the signal that we need. Low, lower than the previous bar's low, and closing on or near its high. That would qualify on that part of the equation, but certainly not on the other. This is not a key reversal bar because its high is not higher than the previous bar, but it's closed on its low. So really what that's telling me is we're getting a bit of a spring coiling. They do it every day, don't they? A spring coiling up here. And this will go, but where, I have no idea at this point. What I would say is it's almost a double cross of both pivots, which to me suggests that if price came back to these pivots, it would probably give us a nice acceleration point through the top of these bars, but I wouldn't be taking that on right now. I don't have a lot of faith in the euro, I've got to say. I just don't. And that's not a clear enough signal for me to trade it. The next one is Kiwi yen. We will come to a conclusion here, guys, by the way. We will come to a conclusion and potentially a trade. Kiwi yen, again, inside bar I'm looking for, but I'm looking for the inside bar after a key reversal bar. Is this a key reversal bar? Yes, it is. Why? Because its high is higher than the previous high in the previous bar, and it's closed on or near its low, has it? Did I say yes, it is? No, it's not. But it's one of those bars similar to the one I showed you, one Aussie Kiwi, that you would consider. But the reason I made a faux pas there and said yes, it is, because I love the fact that it's gone bang, bang across the monthly pivot. So that kind of thing gets me going. I like that. But the market has now said no, not ready to go there yet. So I'd like to see this bar sitting up here somewhere just underneath this low, which would give us lower low, lower high, reason to think we're going short. But it's certainly not there yet, long way to go. But in terms of the inside bar that I would like to trade, yes, that's an inside bar yesterday, but it's not preceded by a key reversal bar. Now let's look at the key reversal bars. Not all of them will be, but we get those of you who are in the ATW family have the benefit of this this EA known as, what's it known as? Something I can't quite remember, but it gives you all these things that that make it far easier. It gives you what we've designated here as a market direction. Now, what's a market direction? Market direction to me needs to be a key reversal before I can look to trade it. Market scanner is what it's called, by the way. Once again, I can't see the chat. Oh, now I can. Can I have a look at the NASDAQ on the W1? Does it qualify as an ABC with an insurance bar? Okay, Fad. Yeah, I'll have a look at that. Not that I've ever traded. Well, I have traded the NASDAQ once and I lost, I think. This is classic. This is beautiful. This is gorgeous. Absolutely gorgeous for me. And this is Euro Swissy. Why is it gorgeous? Because we've got a bar whose high is higher than the previous bar and is closed on or near its low. That is a key reversal bar. Did I trade this morning? And if not, why not? Interesting. I didn't, because I haven't got a trade on my chart. I think I chose something else. Anyway, let's go there. This is tradable. This is absolutely tradable on a daily chart. But it would be better, even better. So you would enter, I must have found a support level that I didn't like. So that fits the criteria of a key reversal, right? But it's better because it's tested the weekly pivot, it's rejected the weekly pivot. So you would think the next move is down. So the reward or to risk here is, let's say you put your stop loss there at 30 pips. Your first reward needs to be about there, which is half. That's fine. Not wrong with that at all. I've got no idea why I didn't take that trade. Interesting. It would be better, however, going back to the inside bar theory, if this is an inside bar tomorrow, because again, that means that there's a little bit of stored energy here. And if it goes in our direction, it should go fairly substantially and hit this level, at least hit this level, which is where we would take our first take profit. Got to check the pound quickly. Pound, nothing yet. Okay, cool. So that would be the better trade. But that said, why didn't I trade this morning? That's kind of weird. Okay, we're going to place a trade here in a minute, guys, and it's going to be Euro Swissy. Let me just write that down so I don't forget. Righto, and I'm going to place an order underneath this bar by a few pips and I'm going to put my stop loss above it. And I'm going to take TP1 here, just above DS2. If you want to place that trade by yourself and follow it, then happy days. Next one is euro dollar. Now, euro dollar is also a what I said before about the dollar, right, is off my list. I just don't want to trade it until I've got a clear indication as to whether this dollar is going further south or it's going to give us a rally in order to get south. But I don't want to trade at the moment. So the reason I didn't want to trade this one is because it's a spinning top candle, and I hate spin. Now I'm getting the picture. Euro Swiss. Hang on, I'll go back there for a second. No, that's okay. The reason I don't like this one, euro dollar, if you see the pivots, monthly, weekly, daily, all in sequential or time order. What's that name? Something. Oh dear, the mind's not what it used to be. Chronologic order, right? So daily's underneath the weekly, which is underneath the monthly. That's all good. It means that the potential for this to go further south is there, because the trend may well have changed here, and it's only just changed, right, to that sequence. So that's a fair indication that we are potentially going to reverse here. But I hate the candle, because the candle's telling me that price does not want to go away from this level right now. When the pivots are condensed and very close together, same thing really, when that happens, it shies me away, because they become a magnet for price. So if price gets away from them, they tend to come back, and I don't want to do that. And that candle there is telling me exactly the same thing. So I don't know why, but it looks like we'll go into consolidation here. Well, I can guess why, because we're talking the US dollar, and really the market hasn't, to my mind, made up its mind whether there is to be a rally on the US dollar as a result maybe of new presidency, whatever that means. I think there's still uncertainty around that. So again, I choose not to trade it. Pound Aussie is another. Again, we're talking key reversals, right? Key reversal, higher than the previous bar, closed on or near its low. This one qualifies. But do I want to trade it short here? I don't think so, because of the weekly pivot. And also, not only the weekly pivot, you've got that level there to contend with as well. So even if you cleared the weekly pivot, you only get down to DS1 and you've got problems. So the reward to risk here is reward of risk of 167. First reward, let's assume you go through the weekly pivot, is 20 pips. Doesn't work. Numbers don't work. And even if you went down to here, you're 1-to-1. And you've got a strong potential of this to turn around it there. So it's not attractive in terms of a trading opportunity. The next one, pound CAD, is or should be fairly obvious to you as to why I wouldn't want to trade that. Yes, it looks to be a massive bar, and you just immediately dismiss that as untradeable. Not even thinking about you trading at a support level, because you'd have to go short here, given that was high, closed on near its low. That works, but the entry doesn't work. Pound yen. Pound yen, again, a nice key reversal bar, but also bouncing off the weekly pivot. Also got poor reward to risk until you come to a resistance level, or a support level in this case. No good for me. But pound Kiwi, I thought was reasonable. And pound Kiwi, I was waiting for a daily pivot test here, and I still think that's on the cards. It has tried to go short, has failed at this point. But you can see the big key reversal here. You can see that it's come back off a resistance level, sorry. So it's rejected that level there out of hand. We've had a big rally with you, a decent pullback, and I figured the pullback was to be to weekly pivot, at least, maybe even monthly pivot, which corresponds with this 189 level. So I thought that was a reasonable position to take, but I should never say you. I have got to wait for a daily pivot test because that's trading against probability if I trade short there. So if I go down to even a 4-hour time frame where we're looking to get that daily pivot test and look at that level there as well, if we can climb above here and then find a reason to go short to the weekly pivot, I think that's an entirely tradable situation, but I'd be looking for it on a smaller time frame. So hourly 30-minute chart, I think, is particularly worthwhile looking at. I don't see anything else here, however, on the hourly chart that's going to help me. In other words, I don't have a confluence of anything. 30-minute chart might be a little bit more helpful, but not entirely. What I'd really like to see here on Pound Kiwi, if I'm going to get there on the 30-minute chart, ready, set, go, thank you, is a trade line. So I need this to become a high. If this was to become a high, I could then put a trade line in here and wait for the test of the daily pivot, price to come back underneath there, giving us a failed attempt at breaking that trade line. Then we could look to trade it short, taking profit here before the lows. That's the kind of scenario. So that's going back to my roots, and that's precisely the process I go through each and every day. Just thought you might like to see how I come to the conclusions that I do. Okay, it looks like we're getting close to an entry here on the breakout trade. So we might stick with this for just a couple of seconds. I might wet my whistle with a bit of, what have I got? Lime cordial. Yum. Okay, we'll just hang in here for a couple of seconds. We are at DR1, which is a horrible level, and our TP1 is above the high. Not something that you would do in a sane situation, but we're not trading sanity here. We're not adding any. Well, we do add some filters to it. Maybe this should be one, and if this does fail, then that should definitely be a filter. Don't trade into the high of, what is it, the week? Yes, it is. And it's the high of last week, and it's the high of the week before, and the high of the week before that. So this is treacherous, absolutely treacherous. So we haven't been here since about May of 2018. Yep. Why now? What's changed? Well, there's been a lot changed, to be honest. So it's not impossible to actually imagine this happening. In fact, that bar that broke out of the range is fairly decisive, is it not? Closed pretty much on its high. There's two ways to look at this. If this fails and comes back in here underneath that trend line, which of course is a long-term trend line, then we could think this is going short. But I don't think I can do that until that happens. It's a reasonable resistance level without question, but this looks extremely bullish, does it not? So are we still thinking the dollar's going to rally? No, don't think so. Have we been triggered? Nope, we have not. Okay, so I will move on. We'll go on a little bit further. So my watch list this week, and I'm way out. Oh, Fad, you asked me a question, didn't you? Let's go. The dollar is in the SH1T. You're right, John. We've been saying it for a long time. And, you know, why I get these crazy ideas that it can rally, I don't know. Have a look at the NASDAQ. My goodness, I hope you only want a technical analysis of this, Fad, because that's all I can give you, mate. I got nothing outside of there. NASDAQ. There it is. Template. I might use a trend template. Don't know what cyclists are. That's those arrow things. Okay. Daily chart's fairly clear, right? New highs, new highs, new highs. Weekly chart, same, very strong. Monthly chart, same, very strong. I couldn't trade against that at the moment, Fed, I'm afraid. I'll tell you what I would need to see to be able to trade this. Couldn't possibly go long because it's overextended, and I couldn't possibly go short until I've got one of two things. Well, actually, one of things. I've got to see two things, but the first thing I've got to see is a potential for reversal. Now, some would say that high test bar is a reversal candle. It is. Is it a reversal pattern? No, in my opinion, it's not. It could form, what do you call those things? Evening stars? I think they're called evening stars. I know what they look like. I don't know what they're called. So if this were to be a bearish bar, then that would definitely qualify as a potential reversal pattern. But what I would then need to see is confirmation of that. So no matter what chart I'm looking at, I've got to see a reversal pattern of sorts. If I was trading small time frames, I'm still looking for a reversal pattern. Don't see one here. There's no bearish engulfing bar. There's no 3 candle setup. It's a little bit of a roll top. That's all. This may well be a left shoulder. This may well form a right shoulder, but it's not there yet. So until I see that, and then a backup of that, or a confirmation of that. And what I mean by that is, let's go to the 4-hour chart. If the 4-hour chart presents like this, and I'm just searching for a pen here. If the 4-hour chart were to present like this, so if this becomes like that, right? That's giving me the indication that price is willing to look at the alternate being new highs or continuation of trend. But that's not enough. I can't just go short here because there'll be, I won't call them there'll be segments of the market, I'll put it that way, that suggest they can pick up some nice liquidity here. Because the minute people see that, and in particular retail traders see that, they want to put their entries here because they see that as the reversal bar, and they see that as their opportunity to get into the market as quickly and at the best possible price. Now, they may be right at times. That may well happen, and the market can simply go like that. But there'll also be people who want to have a liquidity grab here, and they may have missed that. They may have missed that move, and they were thinking short also, but they could also be thinking long. What they would then do is they would allow the market to go to there and pick up all of those sell orders that are underneath that bar, right? Of which there'll be plenty, absolutely plenty. And then they'll buy into the market. So let's say you've got a big boy sitting over here with, I don't know, $10 million that he wants to put into the market, and he's dead set ready to go short. He reckons this is going to reverse. And somebody beat him to the punch because all these people who are in the longs here have just sold out of their position and driven the market down to here, which the retail market has seen, and they've placed their short orders underneath here. Now, all this dude has to do is buy into that, pick up all of that short orders, which allow him to go long, right? Because his orders are filled here. So he's got a liquidity provision right here. He can go long, and the people who got in, or who have got their stops here will then be picked up and the market will go higher. But that's about the time where this guy says, okay, now I've got my price. I'm going to put 10 million into the market right there as a sell order because I've just picked up all of this liquidity here. These are all buy orders here. because they're stops for the short, right? Or they're continuation. Either way, they're buy orders. And if this dude wants to grab liquidity, he's done it twice. He's grabbed it there to get the buy order in. He's made some money here very, very quickly. And then he puts his 10 mil in and the market goes like that very, very quickly. And he probably gets out very quickly as well. But he's probably just reversed scenario. You know, that's really it's a little bit controversial, I suppose. But look, that's if you're trading, you need to know that there's liquidity there for shorts, and you need to know that if that were to be the case, there's liquidity there for longs. You got to know that. So just have a look at your charts and go through all of that, where, you know, things like exactly like here, right? This is exactly what I'm talking about. This guy's, the market's driven down here and picked up all these orders, gone long, and bang, gone short straight away. Those things happen every single day of the week. There's another one there, right? Highs taken out, bang. Happens all the time. And if you see that happen, you pretty much know what's going on. And if you can learn to read that and learn to read where that liquidity is, you can avoid, often you can avoid being taken out in a rapid movement. Just study that for a while. It's a very interesting concept. It doesn't happen all the time, and it's not always the case. But after something like that, I'd be very suspicious. Very, very suspicious. Yes, look, it not only happens every day, it happens inside days. Righto, the weekly fad. Let's have a look at the weekly. Hang on, I'll get rid of this pen. There we go, weekly chart. Have we been triggering yet? I'm sure somebody would have told me. Pound. We have. And we've hit TP1. I hate it when that happens. Righto. What do I do now? I get rid of the short, which is that one, I think. Can delete the cell. Right, deleted. Now I'm going to have to take TP1 here because I've missed it and suffer the consequences if I get taken out then. Where are we? We're at 137.15, so I'm not going to make anything out of this. I'll give it a chance to give it one more spurt. So you guys should have taken profit, right? You should have, if you are trading this, you should have, or has it hit? Might not have hit it. 37.20.2, it hasn't hit it. It's very, very close. Now, what I do if, and this is just one of my rules, because we're basically trading my trading rules on this. If we don't hit TP1 now, because we've missed by less than a pip, I would move my stops immediately to entry, because it means I'm potentially going to lose on what should have been a winning trade. So that's exactly how I do it. I'll just give this a minute to get up there. If it doesn't, I'll move my stops to entry. Come along. Okay, getting close there. 19, 20, 21, there we go. I just missed it. There we go, it's through there now. All right, so now I've got to move my stops 10 pips from entry, as I said. I just closed the whole position. Okay. Oh dear. I wasn't meant to do that, right? 37.01 should be the stops right now. See how trying trading live in front of people can be. All right, there we go. This could be a clanger, or it will be a break-even trade, one or the other. I've closed the position. I shouldn't have, only meant to close half. Right, weekly chart. I don't need to do any more. You guys can follow that as you see fit. Weekly chart on the NASDAQ. Massively bullish, isn't it, really? I mean, it's just so bullish and overbought that I can't describe to you any more than that. How can I make a judgment on how overbought it is, and what do I do about that? Okay, let's investigate that from my side, right? This is what I'm telling you now is not textbook stuff, it's me. So what I would do is judge if it's overbought or oversold. Certainly not oversold, there's no question there, by ascertaining the gap between the daily pivot and the weekly pivot, and what I call what is acceptable to that gap. Now, here's the thing. It should be obvious to you whether that gap is acceptable. Let's go. I don't really want to go back to 2015, but I generally only go back a month. Here you can see the gap. The gap is, measure it if you want. The gap between daily pivot and weekly pivot is what, 34241. What are NASDAQ? These are dollars, aren't they? These dollars, points. I don't know what they're called. They're points, dollars. I don't know. 3424. Let's say it's 3424. Can you see anywhere on this chart where that gap there is the same or bigger? 3424. No and no. So I've gone back more than a month, right? And this is the only time in that month where the daily pivot and the weekly pivot have stretched out that far. Now, let me tell you that there's only two ways that can change, or they can come closer together. One way is that daily price action drags the daily pivot down here. So it goes this way. Price comes back here and drags the daily pivot down. Only has to come to here, mind you, and it'll still drag the daily pivot down, because the daily price action started here, right? So it's only got to come past there to drag the daily pivot down further. So what will happen if price, or sorry, the other way that gap can close is the end of the week. That's the only two ways that gap can close. So does that help you? It should help you, because it should tell you one thing and one thing only. It should tell you not to go long at that point. That's the only thing it should tell you. It's not telling you to go short, but it's telling you not to go long, because you know now that that gap there is as wide as it has been in a month, which means to me that buyers, computers, quants are not prepared to let the market go too far away from that area. Now, that's just logic. It's not science. Well, it is science in a way, and it's certainly not in textbooks. But it just makes sense to me that you don't go long at that point. If I was then to say that we're at DR1, that should mean something else to you, because we're at DR1. We rarely go outside DR1. Is that true or is that false? I'm sure you've seen me do that exercise. So really, to go long here is not an option, or shouldn't be an option. Is that going to stop it going to 14,000 or 15,000? No, it's not, because these things do happen, but they don't happen often, or often enough to bank on them. And that's the whole point of the exercise. Probability is what we're looking for here. We're not looking for perhapses or speculators like I took yesterday. We're looking for probability. I thought probability was on my side, to be fair, yesterday. So that's the whole point. The whole point is isolate areas in the chart. If you're trading intraday, it doesn't matter because your stop loss is down here. Who cares? Who cares what happens today? It doesn't matter. You can come right back to here before you're even in the slightest bit of worry. But if you're trading intraday, you don't want to be trading away from here. You've got an untested daily pivot. You've got a massive gap between daily and weekly pivot. That isn't acceptable to the market. So it just becomes awareness, I suppose. Just awareness of where you are on a particular scenario. Yesterday's and the day before, this week's price action has just been amazing. You know, it's gone, I don't know what they call these things. Are these dollars? Maybe. That's how much I know about the NASDAQ, right? So it's gone 6,750, whatever that means. How often does it do that in a week? And the week's not even over. I'll bet you won't find that happen too often. And again, that's telling you the same thing. It's not telling you to short it. It's telling you not to go long. So Fad, I hope that helps. It's pure technical analysis and logic and common sense to me. It's got nothing to do with whether, Joe Biden's going to put the NASDAQ or anything else to the Mars or Jupiter or Saturn or the moon. It's got nothing to do with that. It's only common sense to me. And again, does it stop it going 100 points north? No, it's not going to stop it at all. It's just the way it is. 3 bars, would that be oh, okay, you asked me that, didn't you? Would that be an ABC? On the weekly, right? That would be an ABC, absolutely. What Fad's pointing out is that on the weekly chart, in particular, I think he's talking about the pivots. It's hard to make this clear. Maybe go back a bit. In there. You can see here, guys, that the daily pivot and the weekly pivot, the blue line and the white line, have been smashed by a decisive selling bar after being, I suppose, smashed but this was last week too, so it's not exactly right by that bar. But then we come the other side. In fact, I'd be more inclined to look at this one. This one's been the smash bar back, and this one is now the potential ABC. Is ABC both ways? So you can go, what is ABC? Let's go and investigate that to start with. I use ABC mainly on trend lines or trade lines, but it's perfectly valid on horizontal levels as well. So, here's a classic example. This is probably a better example down here. So when you've got a break, and this time it's the monthly pivot, you've got a break like that, and it's decisive, absolutely perfect. You've got an A when you've got the break. When you've got a break back, you've got a B, and you're looking for a C. Didn't happen here, but your entry's here, so it doesn't matter. Up here, you've got a break giving you an A point. You've got a retest giving you a B point, which is now extended up here. And you'll be looking for a C point down here somewhere. This would be a wild ride, I can tell you. Absolutely wild ride. It's far better for me on a trade line or a trend line where you get the ABC. But this is how I trade every single time, right? This is an A because it's gone through that level, that daily pivot, weekly. Hang on, I better get rid of that. It's going to be completely confusing to you. So this one actually panned out, right? You've got a break through here. Let's call it a break of the monthly pivot, but it's certainly the current daily and weekly pivot. So you've got an A point here. You've got a retest of that level, which is a B point here. Retest of those pivots. That's your B point. And you're looking for a C up here somewhere. And that may well be the case. So, it's just a three card trick, A, B, C. And it can be used off horizontal levels. It can be used off trade lines, trend lines, whatever. A, B, C. Happens all the time. All the time. In particular in trends, where you see a price pull back, gives you a retracement, then breaks out to the high side with this big bar here, comes back and retests it. There's your A. There's your B. And here's so far your C. So, Fad, you're absolutely spot on, mate. I totally get that there's a pattern there. But I've got to put that together with the other, in my mind, obvious things that are telling me I can't go long. If you're asking, can I go short, and there's this the A, you've just got to find your B point up here and then look for your C. I'm totally on board with the directional bias, but again, I don't have the license to do that because I don't have a double top, I don't have head and shoulders, I don't have a bullish engulfing or bearish engulfing bar as my lead in, and then after that, I'm looking for a lower high to trade it. So, to me, it's directional. Absolutely get it. Tradable, not yet. So it's just a matter of wait and see. If you do get that reversal, it doesn't matter what time frame. If you get that reversal, then a confirmation in the lower high, good to go. Recent three months, would that be maybe Fed? What confluences can you use when it takes previous highs? From Lisa. What confluences can you use when it takes previous highs? Okay, I think I see what you're saying. You can either go, Lisa, to a bigger time frame, which, if it's not evident on this time frame, which is what, weekly, you simply go to the next, and that's going to become problematic in the case of, what are we on? NASDAQ, because there won't be any history. This has never been higher, as I understand it. This is an absolutely all-time high. So that creates a problem. You can either find a confluence in a trend line. If you're using a trend line up here, I would suggest it's unreliable, because despite the fact that we've been going there since, early this year, to me, that is just one-way traffic. It's not a trend. It's one-way traffic. There's absolutely no trend there for me. It's too sharp, it's too fast, and it's too strong to be a trend. So I can't say to you that there's going to be a meaningful confluence here. The only confluence that I could possibly find for you would be the pivots, or if you're using EMAs or things like that, that's where you look for your confluence. But as far as horizontal levels are concerned, forget it, not going to happen. That makes it, it really does make it difficult for that very reason. When you're at new highs, this is an incredibly difficult time for people who, in particular, have never seen this before, and nobody's ever seen this as high. So historically, you've got nothing to go by. But even then, if that wasn't the case, and you've had a very, very long run like this, you've got to come to a position where, how long does this go on? And can I guess the top? And you would be guessing the top if you just went, okay, looks like a round number coming up, let's trade it short. Scalpers will be looking for that all the time. But they're going to have a struggle here as well, because unless they've got a crystal ball, they really don't know where this is going. So the only thing you can do is look for those potential reversal patterns and then confirmations. What does a confirmation really mean? I'm sure he'll be back, Lewis, with his UK trade. He's in a meeting now, which is why he's not with us. As I should have mentioned that earlier. This is to do with IFP on the weekend, I think. So the real meaning of confirmation for me is easily explained. Well, I think it is. Let's say you've got a level of resistance here, right? That's helpful because at least you've got something, whereas before you had absolutely nothing. Let's say this is a double top. I wouldn't rely on that being a double top, but even let's say that's a left shoulder, that's a head, and we've got a right shoulder forming here. That begins our potential reversal pattern. Now, what we don't know at this point is how many sellers there are in the market. Is this just people taking profit? And if so, what are they waiting for? Are they waiting for a former resistance level to become support before they jump back in and start buying again? Or have they just taken profit and they've given up till we come down back down to here or something? This is something that we don't know. But what we can conclude is if there are buyers coming back in here and they don't take out the highs, then something else is going on. And that something else is going to be, well, there are no buyers left. They're all out. They're gone. They're not here. Because if they were here, the real buyers, we've got new highs. If they're not here in number, then they're not going to take out this high. Does that make sense? And if that's the case, we will see a lower high formed. Now, we can't say the trend has changed until we've got a sequence of lower highs and lower lows. So I don't particularly take much credence in the lower low at this stage. I know a lot of people do. I don't. I'm looking for the lower high because I think that's the earliest point that I can get into this trade. Don't have to have a lower low. But once, if you're talking reversals, then you do have to start having lower lows at some stage. But here's the place where you want to pick it up, because this is your confirmation that the buyers are not in the number that they were to take this to that level. It's again, it comes back to logic and common sense. If they are there, they're going to new highs. They're going to push this up here further. But if they're not there, then this lower high means something to you. And that's your confirmation point. Then you can start to think about trading short. Then you want your confluences in trade lines or EMAs or whatever. It was in a day that NASDAQ move. So I reckon take quick profits on this case. Look, Fan, I think take quick profits at the moment is super good advice anyway, because I don't think the market is quite settled, frankly. A few more questions here. What confluence can you use when it take? Right, done that, Lisa. Yeah, I actually did on what you said earlier on the last 3 bars. Okay, cool. Yes, Fad. Lovely, excellent. It was in a day that NASDAQ move. Which one, Lisa? I'm not sure which one you're talking about, but you know, that's how I look and only take notice of reversals. And I'm a massive reversal trader. I love it. I think it's absolutely fantastic. But I'm not going to guess here that this is the end of that run. But I'm happy if I see that, because that's telling me something. That's telling me that these buyers are not there in number yet. And if you've then got a former support level, then it becomes a lot easier, because you can enter the market here, given you've got a setup, and you can take profit here just in case these guys decide to turn up again. They'll turn up here or they'll turn up here, but this will only be a bounce point. This won't necessarily be a continuation point of the trend. These are the levels, these ones here, where you've had the retracement. That's where price will come back to, these breakout levels. But yeah, any reversal, to me, you can fluke it, you can absolutely fluke it, but waiting for that confirmation is the key. How is the pound going, guys? And then I'm going to have a look at my watch list, and then I'm probably going to chuff off. Unless you've got any more questions, more than happy to answer them. You're welcome, Fad. Pound, 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 pound. Okay, where's TP2 for you guys who might have been in this? It's at 137.51, about there. So you saw what I did, didn't you, Goose? I, instead of taking half of the trade off, I took the whole lot, which is why I'm not still in it. But there's your TP2 there. If you hit TP2, you've got a choice. You can either take half of what's left on the table and bank it, and then move your stops to entry, meaning that you're in a winning trade no matter what. Or you can simply move your stop to entry in the hope's a terrible word when you're trading, in the belief that this will continue higher. And there's no reason why it can't, because the dollar is in, as John eloquently put it, with ... but I'm sure he meant SH1T. It absolutely in deep SH1T. So this could go anywhere, absolutely could. And this is the whole point with trading this, right? If it does go, and it goes 100 pips, 200 pips even, maybe even 300 pips, maybe 500 pips, then you've got in at a very cheap price of what? 20 pips. That's the whole point of this, right? You're going to get more losers than you would like, there's without question. But the winners that you get should make up way more than the losers that you get. The reason I'm trading it on my system is because I'm trying to limit those losers to break evens, right? So we should be getting more break evens than we get losers, and we should be getting more break evens than we get winners, because the way my system works, it generally works on 4 winners, 4 break even, 2 losers. And that's what we call the 80% win-loss ratio. If you do that consistently, and I'm not sure this can do that, right? This breakout trade, but that's what we're working towards, so that we do get that 80% that aren't losers, right? If we get it to that point, then you can start to trade it, and you can start to trade it with decent money, because it's got history behind it. And going forward, you will have a nice system that tells you every 1 lose that you have, you need 1.5 winners. That's okay. It's not bad. Right. Trading. What am I looking to trade? Well, we were looking at, did we actually put Euro Swissy on? We didn't. Wow. And it's falling. Ah, dear. You see what it's like when you talk too much. Euro Swissy. It's not even on my chart. No wonder I'm not trading it. Let's go back to this chart. Euro Swissy. Daily. Daily. That's not Euro Swissy. That's Euro Swissy. Oh, terrible candle. Terrible candle. So entry would have been here. Did I say 30 pips? Take profit here. So you still got to get down to here. Yeah, it's not a nice candle, this one, at the moment anyway. But if you have a look at, yeah, why has it come off? We've had news, no doubt. Let me have a look at that Forex Factory. Calendar. This is a news web, by the way. Thursday. Look at that, Aussie numbers. Why isn't the Aussie going through the moon? That's a good number coming down. Unemployment rate falls. Generally, currency is well rewarded for that. We've had no more news, have we? 9:09. I'm on GMT, of course. 12:45 before the ECB. Interesting. Okay, there's something moving the market. I'm not sure what that is at this point. The euro, I don't really want to touch the euro. We're in a euro CAD trade, and a lot will depend on what happens in the ECB statement. Let me have a look at that. But there's nothing I want to do here, I don't believe. We've got that much room to buffer any statement, I believe. I can't see it being an entirely bullish euro statement. Shouldn't drive this up here. So I've got no qualms about it. The CAD statement last night, to the best of my knowledge, was, let's say, on the side of hawkish rather than dovish. So this is in good shape, I believe. Euro CAD, I've got no problem with it. The ones that I was looking to trade was pound Kiwi. How's that looking? Not good, I wouldn't think, if the pound's rallying. Again, I haven't got pound Kiwi on my chart, for God's sake. Let me go there. Daily. Pound Kiwi. Slow this thing. The EA pulls it up, see. Yeah, we're still looking for that daily pivot test, aren't we? That's still possible. I actually like this. Looking for a short. Yeah, this is doing pretty much exactly as we wanted it to do. Our problem is we don't have a legitimate trade line except on the 30-minute chart. Maybe there's one forming later, I don't know. In fact, that's not legitimate yet either, because we haven't got a high yet. But this is very promising. I'd love to see this happen. Daily pivot test, back underneath, retest it, short, take profit here at what could well be a left shoulder, head, right shoulder. That's why you've got to take profit here, because this could easily turn into a reversal pattern going the other way. What else? We're talking about Aussie yen, right? Now, I'm a little bit surprised here. Somebody asked me a question about Aussie yen on Monday or Tuesday. And my answer was, I can't see why you wouldn't want to go long Aussie yen, but I would wait for retracement down to this level. It's pretty much what happened. Got a little bit below it and then took off. Look at that. Bang. But it's not going on with the job. Interesting. Because of that good Aussie news, you would have thought this would take off. It may yet. That's true. But yeah, not yet. Maybe it's waiting to come down here and test the daily pivot, then go. I'd look at that. I would definitely look at that. Euro pound, I've completely missed euro pound. This was something that I wanted to get into, and it looks like it's really on its way. I'm not sure how I'd get into that now. I'd need to see a retest of this level that's now been broken. But yeah, that's extremely strong. Kiwi CAD, again, looking to trade this short. So if this gets up to these pivots, I'll be looking for some form of reversal on that. Hopefully there'll be a trade line coming through here somewhere. So hit the pivots, back underneath them, retest the confluence area short. Pound yen, I was looking to trade short. We had a nice double top here, was looking for a lower high. It looks like we might get an equal high or a new high. So that may be either A, on the cards with a lower high, or B, off the cards with a new high. Dollar CAD, I think I just should sack it for the moment. Like I said, and here may well be what I was talking about before. This may well be a liquidity grab here, although the market hasn't taken off. And I can understand that because the dollar is just so weak. but there's beautiful liquidity here for anyone who's thinking going long here, no question. But they should have done it by now, and that's the issue. Leaving it alone, guys. Pound Swissy. Pound Swissy is getting interesting because we're getting to the top of this, what is a very protracted and certainly obvious range. We'll draw it through there, I think, to start with. So, you know, as a range trader, what am I looking for? Looking for the top, not to trade the top, but to trade the reversal off the top. So back under here, take out the daily pivot, come back and retest it, give me a lower high, bang. We'd be looking to trade that short. That's the daily chart, of course. It could happen way, way earlier than that. So nice little bar there, rejection of the top of the range. A lower high here, that doesn't qualify. I like to see it get underneath the daily pivot, as I said, then give me the lower high here. That would look interesting. Swissy yen, we traded this last week, or was it this week? And that was a winning trade. Was it last week? Last week we came down to here. Then we got that. Yeah, it's back here again. Bit messy. Yeah, no, I'm not interested right now, but I would get interested if, again, we'd get a false break of resistance. As always, that's what I'm looking for. It's not there yet. Guys, I think that's about it. I've exhausted my my choice of trades at this point in time. I think it's all done for me. Really surprised the Aussie hasn't taken off. What's the weakest currency, guys? That's what we need to know. We go to FinViz for that. Have I got FinViz anywhere? Yes, I do. All right, I'll just explain the last thing that I'm looking for here. I'm keen on the Aussie, right? So I need to find the weakest currency to trade it against. The quick way for me to find the weakest currency is to do a quick rundown of monthly. What's been the weakest currency over the month? Ready, set, go. Euro, yen, Swissy, all the risk-off currencies. Interesting. Forget the dollar, I've sacked the dollar, right? So this is a very clear indication that commodity currencies have been good over the month. The risk-off currencies have been bad. The week, has it changed? Over a week, we've got risk-off currencies still weak, euros weakened, pounds strengthened, but the risk-on currencies are still trumping the risk-off currencies. Daily, same, except the CAD's come back. Don't want to see that. Remarkably, the CAD's come back. I don't know why. Yen's still the weakest, guys, it looks like. So Aussie yen is the way to go here for me. Because we've had good news on the Aussie, and the yen is still the weakest over those 3 time frames. So that's what I want to pick. Aussie yen, and that's exactly what we've been talking about, right? How do we get in? Back to the daily pivot, as I said, would probably be the best course of action. Otherwise, it's a bit tricky. If it were good enough to retrace way back to here and hit that level again, this level, get back above, retest, that'd be awesome. That'd be a great price to get in at. That would be my pick today, Aussie yen long. And I don't know why. Interesting that it hasn't gone, just shot through. Very interesting. Maybe the market's waiting for something. I'm not sure what that is. Maybe the ECB statement. That could be it. Oh, okay, Lisa, got you. That big candle on the weekly was yesterday. Yep. To do with Biden and the inauguration, no doubt. Guys, that's pretty much it. My goodness me, look at the time. I hope you've had a decent week. It's been a little bit boring, I've got to say, in terms of tradability. but I do have a few things that I'm watching now. How's that bloody pound going? So if you are in the Telegram group, and hopefully you are, look at that, nearly up to that TP2 mark, and dopey old me hit the get out all. Oh dear, that's trading, isn't it? The week was okay. Good, John. I hope so. And let's hope it continues to be that way. Thank you guys for being here. Thank you, Angel, for the week and looking after us and making sure that we didn't get trolled. It's been rather more relaxing than it was with those trolls in the room. Guys, have a great weekend. Keep up to date in the Telegram group, and we'll catch you next week if all goes well. Have a happy